Hello all. Here in this video, we will be talking about support and resistance levels. When it comes to trading assets, the name of the game is knowing where to buy and where to sell. Fortunately, we can understand where to buy and where to sell an asset by identifying price floors and ceilings. Specifically, a price floor refers to a support level and a price ceiling refers to a resistance level. On this chart that I am currently showing, I have identified a bunch of different support and resistance levels. Of course, these are not every single support and resistance level, but rather just some of them to give you a better understanding of the concept. Let's go ahead and talk about what these lines mean and what they are doing. It may be easier to think of a support level as being a literal floor in a building, where a support level holds the price of an asset from falling to a lower floor. Likewise, resistance levels could be thought of as ceilings in that same building, where a resistance level prevents the asset from increasing. If support levels hold the price of an asset from falling and price is likely to bounce to the upside as support levels, then a trader can look to buy or go long when an asset is near or at a support level. Similarly, if resistance levels hold the price of an asset from increasing and price is likely to reject and bounce back to the downside, at resistance levels, a trader can look to sell or go short on an asset when a price is at a resistance level. However, what happens when price breaks through one of these support or resistance levels? Well, to answer this, we can again allude to the analogy of a building. Imagine you are on the 12th story of a building. Well, there is a floor and ceiling there, but the floor and ceiling do not make it so that it is impossible to go to either the 13th or the 11th story. One can simply take the stairs or the elevator to achieve a different story. So say you take the stairs up and go to the 13th story. At this point, what was previously the ceiling of the 12th story is now the floor of the 13th story. Likewise, if you were to instead go down to the 11th story, what was previously the floor of the 12th story is now the ceiling of the 11th story. This can be translated directly to the price of an asset, where if price breaks through a support level, that level would then become a resistance level. And similarly, if price breaks through a resistance level, that level would then become a support level. With that being said, no level is ever just a support or resistance level, but rather each level is a pivotal point where if price is above that level is currently a support, and if price were to be below that level would then be a resistance. Take a look at each of these different levels. You'll notice that when a resistance level, like this one right here, is broken, it'll turn into a support. Likewise, when a support level is broken, kind of like what we're seeing over here, when this support level is broken, it turns into a resistance. But of course, if that resistance is then broken again, that level would then turn into a support. As great as it is to know what a support and resistance level do in terms of price movement, it is equally important to be able to correctly identify a support or resistance level. This can be done efficiently using the two-touch rule. This rule essentially states that if price bounces off of a singular level at least 2 times, then this level can be identified as a support or resistance level. You'll notice that each of the levels here have at least 2 touches of where price rejected, whether it be multiple support rejections, like we're seeing here, or multiple resistance rejections, like we're seeing here, or a combination of both, where we have a support bounce and a resistance bounce. These would all be valid for the two-touch rule. Now, the more times that price bounces off of any given level, the stronger that level will tend to be. For instance, say that the price of an asset has bounced off of one singular level, say 10 times throughout history, and each time it rejected off of this level and bounced back to the upside. Well, this level would be considered a very strong level of support, and this means that it will be very difficult for price to break through this level of support. If price has a tough time breaking through this level and typically has seen a move to the upside after touching along the level each time, then this level can be referred to as a very strong buying opportunity. However, the strength of this level translates over if this level were to be breached. This means that if the same level were to be broken and price successfully moved below it, then that level would immediately turn into a resistance, and the strength of that resistance level would be equivalent to the strength of when it was a support level. So if price moved below it, it would generally find a harder time to trying to break back above it and will typically take a couple retests of the new resistance level before successfully breaking back to the upside. So if price moves below it, it will generally find a hard time trying to break back above it, and it will typically take a couple of retests of the new resistance level before successfully breaking back to the upside. Take a look at this level here, where there are a lot of resistance bounces. We have one here, we have one here, and we even have some over here and here. Well, in the case where over here, where price was able to break above and fully move above it, it turned into a strong level of support that caused for a continuation to the upside to higher resistance levels. Also, notice that each of these resistance and support levels, they don't have price touching exactly on the level. Sometimes it's just below it, and sometimes it is just above it. This is due to the fact that support and resistance levels are not exact levels, but rather thin rectangular zones where price typically rejects and moves into the opposite direction. So when identifying a level, understand that you are making more so of a line of best fit where price tends to reject at. From there, you can use these lines as guides where you would look for signs of reversal or continuation through the level. We will talk more about how you can identify if a move is likely to occur through a level or not in later videos, but for now, let's just focus on the concepts of support and resistances and how you can identify them. Now let's take a look at this chart here and go through how we can identify and mark these levels using the methods that we have been going over. First, I would go over here, select my horizontal line, and look for places where there are multiple points of touch. Notice if I go ahead and create this line here, we have multiple touches over here, a rejection over here, and even a bit of resistance over here. Now that we are above this level, it would currently act as a support. However, when it was below it, it was acting as a resistance, and previously it was acting as support. We can identify more of these levels by doing the same thing. Notice here, I'm making just pretty much a line of best fit. You can adjust this line like so, and it is pretty much just acting as a line of best fit where we are looking for either to be resistance or support along that level. But notice the two touch rule is still valid here, where we have two touches over here acting as support, two touches over here acting as a resistance. We get a slight move above it over here, but it's still acting as a resistance nonetheless, and then it ended up rejecting. So if price were to come back up to this level, we would watch for signs of continuation through the level or a potential reversal for it to bounce off of that level. There are many other lines, like this level right here, where it was support right here, broke through, turned into a resistance, and then when that resistance ended up breaking through, went to the next level of resistance, came back, found support, broke back down through the level. Now this level is currently acting as a resistance. So if price were to reapproach this level, we would look for the same thing and look for it to act as either a resistance that pushes the price back downward, or if price is able to push through this level, we can look for it to then turn into a level of support. Okay, let's go ahead and take a look at this chart here. If I wanted to go ahead and identify some support and resistance levels, I can go ahead and pull out my horizontal line tool. And if I were, say, looking for a support down here, notice the two touch rule applies, where we have a touch here and a touch here. So this would be a valid level of support. If I pull it out again, we can identify that this is a resistance level right here. Notice we have resistance over here, a bit of resistance over here. I can adjust that line just to make it fit a little bit better. And then now as price is approaching this level, I would look for it to act as a resistance, either pushing the price back downward, or if price is able to make it through it and see it act as a support. We can identify more lines like this resistance level right here, where we have multiple points of touch against it. And we can even find another level of support by just going over here, where we have a level of support here, turned into resistance, but then now it is acting as a support since price is currently above it. Anyway, depending on the time frame that you are using to do the analysis, different support and resistance levels are likely to present themselves. There is a general strong correlation between the time frame that you are using and the strength of the support or resistance level that you identify. Namely, the larger time frames, such as the 6 months, 1 year, or even the year-to-date time frames, will generally provide stronger support and resistance levels than time frames such as the 1 day or 5 day. Say you are using the year-to-date time frame to identify support and resistance levels, kind of like the chart here is showing. If I go over here and just identify some levels of support and resistance, notice this level of support here, but now that price is below it, it is currently a resistance. And I identify some other levels using the two-touch rule, kind of like this level right here. And remember, you're kind of just making general lines of fit. These are not going to be exact levels, but they help you get a strong understanding of where support and resistance tend to be. Anyway, I can identify a couple more of them here. Notice with this two-touch rule, resistance here. Now that we're above it, it is currently acting as a support level. And I can even identify this bottom level down here that acts as a level of support. Now, if I go down to say the 5 day time frame, notice what will happen. Now I am able to identify a bunch of other intermediate levels of support and resistance using that same two-touch rule. However, these levels were not so obvious when I was on the higher time frames. But when I go to the lower time frames, I'm able to see these intermediate levels of support and resistance. Now, these ones that I identified on the smaller time frame will tend to be a bit weaker of levels in terms of price breaking through it. However, all of these levels that are just marked are support and resistances nonetheless. Just the ones that we marked on the higher time frame are going to be a lot stronger than the ones that we marked on the lower time frame, meaning that it is going to be more difficult for price to break through the levels that you identify on the longer time frame, where there are likely to be more rejections at these levels before breaking through. So for those of you guys who are just starting out and charting your very own support and resistance levels, a very strong way that you can either confirm the levels that you have drawn out or assist you in identifying these levels is to use the pivot points tools. So basically what I'm using here is the AlgoVision Premium Indicator, which you can get in a package deal. But how this works is essentially go to your settings and you'll have a pivot type, a period, and you have some toggles that you can do to adjust the settings. Right now, I'm looking at the traditional on the daily pivot. So that means that each of these pivots are going to reset every single trading session. And essentially what they do is they mark out the different support and resistance levels. So if I go here and just actually zoom out a little bit, you'll notice that we have the pivot level represented by P. And basically what this means is this is the big level that we're watching. If it is above the pivot level, that means that the buyers are in control. Likewise, if it is below the pivot level, that means that the sellers are in control. But if the buyers are in control, we're watching key resistance levels. And the key resistance levels that we're watching are R1, resistance 1, R2, resistance 2, and then R3, resistance 3. Just a word of caution is that these are not as effective as charting by hand, but still incredibly useful for beginners. But what I would recommend is charting by hand and possibly using these levels as confirmations of support and resistance levels, or to identify which support or resistance levels are stronger. Basically, what you can do here is notice right here we have an R1. This is the first resistance, and notice that we do find some resistance right here. However, it breaks above this resistance level. And remember what happens to a resistance level when it's broken through? It turns into a support. Notice it acts as a support over here and then bounces off and moves to the next resistance level where we are currently trading just below. So that's a very useful way you can use this, is to look for it to act as support and resistance levels that you can trade the breakouts of. If we look over in the past, this is a relatively accurate one. Notice we have the pivot level here. We're getting a bit of consolidation below it, but once we get a move above the pivot level, it turns into a level of support, goes to the next resistance level. That resistance level is where we then see consolidation, and then we bounce off this level as the buyers have now came into control. Here's an example of where the pivot level was then broken through. Notice that we're trading above the pivot level. The buyers are in control. We get a bit of consolidation, bounce off of this resistance right here, and then break through the pivot level. When it breaks through the pivot level, it then quickly turns into a level of resistance, and then the sellers have now stepped in and have taken control, and we see a nice move to this one level of support. So this is a very effective way to actually chart without having to do all the charting by hand and even confirm if you're seeing a correct support or resistance level. Now, the one that we're on right now is, of course, the daily pivots. So this is very effective for day trading or even scalping, since essentially this is going to reset every single day. But you can also change this to weekly pivots. Let's actually go to the 2-hour chart. Notice here, these pivots now reset every single week, and they act as very strong price targets for swing trading opportunities. Notice we get a breakthrough of the first level of support. It then turns into a resistance, and then as the week changes, it moves down to the next level of support, where it then finds a level of support, turns into a level of resistance, and then continues moving downward before finding that next level of support, where the pivots did end up resetting. So this is just another way that you guys can actually go ahead and swing trade. And yeah, so right now, these are actually the traditional pivot points, where they pretty much just use a standard formula to calculate support and resistance levels via the prices that are provided from the data. But what you can also do is change this pivot type to Fibonacci. And let's also go ahead and look at the day and go back to the 5-minute chart. Now, what the Fibonacci pivot points do is it simply just applies Fibonacci proportions such as 0.382 and 0.618 levels to the traditional pivot points formula to give you some more harmonic levels. And these are very useful when you're trading with, say, the Fibonacci retracement tool, which we will go over in a later chapter. But you guys can see these levels do tend to be a bit more accurate. And personally, I do like the Fibonacci pivot points a bit more than the traditional pivot points just because of how accurate they are, especially in an intraday move. But definitely try out each of them, see which one you like, and whichever one works better for you tends to be the one that you should use. So definitely give them both a try. Anyway, guys, that'll do it for this video. In the next video, we'll be going over trend levels of support and resistance.